morning or afternoon or wherever you are. Let's turn down the news here. So thanks for joining me. We are going to talk about just raw technicals today. All right. So this is going to be kind of a nitty gritty sort of session. So it's going to require a decent amount of concentration on your part because we're gonna build on a few concepts and then go from there. And let me just make sure I got the Q&A here. Guys, if you have a question, if you could just throw it in the chat. I'm not sure what I've done with the Q&A here, but bear with me. Anyway, let's get cracking. And like I've said before, I always encourage some participation. So if you have anything on your mind while we're going through some of these things, then fire away. Okay. So in the past couple of webinars, we have in the past couple of months we've talked about fundamentals, and we've talked about how to develop fundamental biases. We've talked about the patterns of how these things go. We've talked about things like the cycle from one currency to another. So in other words, which way does central banking policy generally go? It generally goes this way, right? I'm saying generally. Obviously, other things. We can even slide sort of CAD in between there, but these are the major ones that we look at. And policy generally goes this way, right? What happens in the dollar, then several months later will happen in the euro. In the pound, and several months after that in the euro, and several months after that it heads towards Asia. So if the US starts to pause QE, then you're going to see the same kind of trend develop in the pound and the euro, blah, 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 etc. If the US is going to raise interest rates, or the anticipation of raising interest rates, it'll generally flow in this direction. Generally. Obviously, there are some contingencies relative to that. Okay, and then the yen, you ask? Good question. Nobody asked that, but I'm asking myself these questions. The yen's out on its own mission, right? The Japanese are kind of up to their own thing, so we don't count that in. If you're going to see a rate hike in the dollar, you don't necessarily expect it out of the Japanese. Okay, but this cycle is important because if the dollar is slowing down, what's the first currency that we expect to pick up? This guy, Mr. Pound. And then probably Mr. Euro, and then Mr. Aussie. Okay. Now, the pound will generally do reasonably well. The euro will do less well when it makes that move, but the Aussie will do the best out of all, if that makes sense. So in other words, let's attribute a score to the magnitude of move we can expect. All right. So let's say that when the dollar sells off, we could expect and I'm just throwing a random number out here for perspective. We could expect a 6 move out of the pound, a 3 out of the euro, and an 8 out of the Aussie. Why? Because there's going to be the most yield here. So when this finally turns around and becomes an attractive sort of carry instrument, the most money is going to flow into there. All right. So although the Aussie might be muted now, let's say hypothetically we are looking for some dollar weakness. This puppy is going to be the instrument of choice, but not now, if that makes sense. Right now, it's the time for the pound to shine, and the euro is about to, I really think, kick in a little bit. So, this guy might be lagging, but you're likely to see if the pound goes up like this, and the euro kind of goes up like this, Aussie, more likely that kind of gradient. All right, so something to think about. It's all part of developing that bias that we've talked about. I'm a big believer in that. You guys are very quiet today, but I'm very good at talking to myself. I actually am. All right. So let's talk about some. Like I said, guys, if you have a question, please put it in the chat. So there are a couple of ways. I'm going to give you 2 tools today. One is support and resistance. This webinar is geared to everyone, the advanced trader, the newer trader, because I think that these are just universal tools. All right, support and resistance, and we're not going to talk about fibs necessarily today. We're just going to talk about visual, horizontal, support and resistance, not even trend lines necessarily. All right. So how does, here's some rudimentary stuff, right? Market goes up, makes some major swing lows, all right, changes direction, pushes below these levels. Those levels then, instead of support, become resistance. It's not rocket science, is it? There we go up. We generally, have a look at that. Oh, no, okay, wait. Yeah, no. All right. And this is the general pattern of support and resistance, is it not? So really what we want to know, is what's going on here, what's going on here, and what's going on here. All right, and what's going on here. In other words, where are these changes occurring? And what do those look like? And are those tradable events? Not everything's a tradable event, right? It may look like in retrospect, but it's often not. Okay, so our question for us is, what is happening at these areas? Okay, now remember something is that it's not just about what's happening technically, it's what we anticipate happening at these areas. What pair and time frame are these lines? I mean, obviously they're not a pair specifically. I'm just talking about an abstract sort of individual theme here as far as how things interact. And this could be a daily, 4-hour, weekly, whatever. All right, I'm going to bring it into context here in a minute. All right, now, around these support and resistance points, or even by themselves, remember that a change of trend can create its own support and resistance. All right, so trend changes, and I have a little ebook that I can distribute for if you guys email me, and I'll just send it out to you. It summarizes all of this. I say ebook, it's more like a PDF. So if you need it, just let me know. Okay. So price changes direction in a couple of simple ways, right? Bullish to bearish. A uptrend is a series of higher lows and higher highs. Okay? And a downtrend is a series of lower lows and lower highs. Those of you that have been around a while, these are easy concepts, but those of you that haven't, maybe there's somebody here that's looking at Forex for the first time. This will be a revelation. All right. So what we really need to know is when these series of higher lows and higher highs are doing something else. All right. So to change direction, typically, you're going to make a higher low, a lower high, and a lower low. All right. So this sort of pattern, all right, notice how we're making higher lows, higher highs, higher lows. All of a sudden we make higher low, lower high, lower low relative to this previous swing. Okay, now for that particular time frame, say it again, for that particular time frame, that would be a change of trend. Meaning that we could expect a level of continuation to the downside. Now it depends contextually of the time frame. And I'm going to specify, like I said, when I said we're going to get technical, we are getting technical today. All right, so we're limiting our measure of tomfoolery here. Okay, now, trend change, bullish to bearish, number 2. Higher lows, higher highs, higher lows, higher highs, higher high. And then the swing low breaches the previous 2 swing lows. So in other words, there's no lower high preceding the lower low. This is just a lower low breaking the last 2 swing lows. Kind of like this did. Here's a swing low, here's a swing low, price went up, broke it. It'll change the trend. The same can be said, if anything, this looked like a little higher low, higher high, but I could anticipate this side here being, here swing lows. Swing highs. And there's a concrete breach of those 2, and you've got it pushing into the left trend. Okay, now, and obviously the other one here is a little bit like number 1 option, in that you get sort of something like this. You get a double top, and then you break the lows, and you can anticipate sort of something like this developing. Okay, so those patterns are very generic patterns for a change of trend from bullish to bearish. Any questions about that? Fire away now. All right, now bearish to bullish are the same thing. Okay, making lower lows, higher low, higher high. That's the reciprocal of number one. Number two is like this. Breach of those two, and then you'd expect kind of something like this, and a little continuation. Okay, now here's where we need to be smart, and this is where I see a lot. I mean, for myself, I have rules against this, and it's taken a lot of beating on the head to get there. Okay, now, silver is a classic example of this. Right, so you look back on a weekly chart, and price does this, cruises up, changes its trend, okay, comes down. Yeah, this kind of thing going on. And then pushes down. Okay, now resistance now becomes support. I guess I should put red there. Le resistance now becomes support. Okay, but where is our resistance? Here. Okay, so this is a weekly chart. Now we expect this to bounce and at least go back. We expect this to bounce by virtue of the support and at least go back here, do we not? Seems reasonable, and that's a very nice trade. So then we'll start to watch a 4 hour or something, so this is a weekly. So then we'll start to watch a 4 hour around here, and we'll start to see this develop. Oh, okay. Little head and shoulders, a little break of it. Comes all the way down. All right, you buy it. Looking good, looking good. And it comes up and hits this resistance. Right? Now you have an issue. Because now what happens is you get this little change of trend like this. Do you want to short that? Probably not. Said differently, do you want to buy it? Probably not here. Because why? You've come off and you're in the middle of the no buy zone there. You're not at resistance, you're not at support. But you've hit the major swing point. All right? So what you need to do here is let that change of trend do its thing and push you down to a point where you're back at the support. Right now you have enough room to chase it probably back to the resistance. And this time it's actually got a better shot to break because you get sort of something like this develop. All right. So here's the challenge. I know that probably went over a lot of you are probably like glazed. What's he talking about? Let me show you. And I promise you I'm saving you pain. If you pay attention here, I'm going to save you pain. This I promise you. Friends, Romans, fellow countrymen, lend me your Fibonacci. Okay. I promise no tomfoolery, but I can't help myself at times. All right, so this is as far out as I can go on this silver chart. Perhaps I have something else. Different one. Okay, this is better. You can see further out here. These concepts apply to all things. Equities, currency, bond market charts, commodities, whatever floats your boat. Right, so here's a silver chart. And up back in, I want to say 2012, when we were lurking through here, I had sort of 15 in mind for a trade back towards 22, 23. Right now, it's not difficult to see that there's a very significant monthly trend line here. Monthly. You're going to figure that the base to turn that ship around is like turning an aircraft carrier around. So you're going to have, remember we talked about last week, we talked about the difference between climate and weather. You're walking your dog. Here's a man. And he's walking his pooch on a leash. The dog runs like this. Back and forth and all over the place, sees a lamppost that it needs to check out more. He runs back and forth. This is weather. All right. In other words, these are the shorter term time frames. This is the doggy sort of going back, running within the however, the man is walking this way. The man hasn't deviated. So in other words, this is the longer term trend, the black line, the man. This is climate in this case. Weather is the dog walking back and forth, and that's effectively what the shorter term time frames are relative to the longer ones. Remember, the market's fractal. So in other words, the shorter term time frames are self-similar building blocks of the longer term time frames. If you look at a picture, you should be able to see in one pixel of that picture, you should be able to see every detail of that picture in that one pixel. Okay, that's what fractal means in layman's terms, which I'm a layman at it. Right, now, what sort of interaction would we expect here? Well, because of my fundamental bias, I'm saying to myself, stock market, how much value is there? Oof, stretched. Dollar, stretched. Stretched. Bond market, overbought. We've had central banks buying it for 5 years, 7 years. So can't really go there. Other than individual sort of areas, this is on sale. This silver, it's on sale. So this, although it's a monthly, this zone, and I'm highlighting a large zone, this is like Walmart selling TVs on Black Friday. Okay? And it may not be a sustainable trade, but we'd at least expect a level like this to precipitate a bounce back up here somewhere. I would, and I'm trading for it. So what's it look like? Okay, so let's cruise down here to monthly. I know there's a lot of lines in here. Please forgive me. I'm going to get rid of the green. Right, now, we've come off that 15, 20 support zone, and I'll try to zoom out here, and you can actually see a little bit sort of, it was a spike high, swing high. You know, it was an area where price interacted a lot, and I think we've just missed this trend line. I think this trend line is actually closer to sort of 12. Okay, and obviously you can look at gold and things for correlation here. Now, when I look at this, there's a couple of things that I notice on the daily. All right, actually, we'll look at a weekly. This here is a very subtle change of direction. You see it? Here are swing lows. You know, consider that a double bottom, little spike capitulation break. And here's your higher high. So this is this chart pattern. We actually made money on this trade. You know, kind of something like this. Pick it up. You know, do your best to buy it up. Now what's happening is it's hitting this. So now I'll ask you, which level is going to win out? The support or the resistance? The easy trade's gone. Okay? And now you're looking at this saying, but David, I have a swing high, swing low, lower high, lower low. You're absolutely right, and you do. And you're coming off the resistance. So what's likely to happen here? You're likely to get a pullback and one extension. Okay? I don't particularly like this trade here. I don't particularly like this short because I think it's come off enough support that, and it's my bias that I want to buy it. So while this is probably a $2 or $3 trade, I will skip that trade. It's against my bias. It's come off meaningful long-term support, and I'm sort of ping-ponging around between the range. However, from a purely trend tracking standpoint, it is justifiable. It's just like the pound. I'll show you here in a minute. There's a short coming up, but I want no part of it. Guys, the way that I trade's very conservative. I go bias, generally fundamental, check. And then I go, am I bullish or am I bearish? If I select option A, then guess what trades go on? Only buys. Then I'll look at it where I want to buy it, and I'll go order, order, order. Risk. And that's it. And the rest of the time, you know, I read news articles and watch YouTube. All right, so getting back to the silver. All right, so we'd like to see a push off around the 1720 and push down back towards 15, back towards the support. Okay, we'll zoom out here again. Remember our trend line and horizontal step? Make sure we have this right. Down there a little bit. Okay, so my trade plan here is going, well, got this hefty support here at 1480. But I'm coming off the resistance. I don't know which one's going to win out. So I pick a side. Okay, let's go to our daily here. And what do I anticipate happening? I anticipate, you can also see that on this daily, there's some buying through here. I anticipate people trying to sell it here. Why wouldn't they try to sell it through here? They might, and they have. But it's too much support for me to want to sell on such a shadow pullback. So I think it does something like this. Fails. Low high. Pushes down. Well, hang on a minute. Now we enter this stuff. This is more legit, is it not? There's nothing wrong with this short. It's just come off so much support and against my bias, I'd prefer to refrain. Ultra conservative. Ultra conservative because I've been kicked in the face enough. All right. Now what can be anticipated down here? So let's say hypothetically we're right and it pushes down here. Could we expect some kind of base? I'm all about that base. No treble. Probably. All right. Remember, we talk about monthly, so this whole process is going to take a long time. Here's your change of trend. Okay, that's why you don't buy it. That's why you don't buy it through here. That's why you buy it here. So if you're wrong, you're not badly wrong. And let's say this goes back up to the drop here and pushes down some more. Perfect. That's perfect. That's actually what you want. Because then you can look, then you can do this. It'll change a trend, you get in, make a few dollars. No, didn't work out. Want no part of that short? Great. Now we can base out. How many times have you seen this? Okay, here's a little nugget. If you haven't learned anything today, ease forward in your chair, ladies and gentlemen. If you have a major support or resistance area like this, the price comes down. I'm jumping all over the book a little bit today. And then you get something like this going on. You are getting a continuation pattern that's very tradable. Okay, if the major support is down there some, you're getting a very tradable event. You might get sort of something like this develop. Okay. Please notice how this is a different scenario to something like this. Here's the support. We're on our way down. And all of a sudden you get this. I'm actually going to undo this a little bit and scoot back. And you get this continuation of flag like this. But the support's right here. In these cases, I wait for it to do this. Hello. Thank you. I don't wait for anything at that point. I go, thanks. Long. You know, and then it has the opportunity to do something like this. Anytime, if you have a continuation pattern like this, a little flag, that is not close relative to the support, it's a tradable event. However, if you get a continuation flag at the support, you should be a buyer. Who can tell me what pair is doing a similar thing to this? All about that base. No treble. I would say oil, and also think maybe some euro. Check it. Okay, 2 reasons. All right, so anyway, let me cut to the yes, yen a little bit, and euro. I'm gonna do euro here in a minute. But this silver to me is a buy here and a buy here. Looking for about this sort of 21, 22 zone. So I'm a buyer 3 here for this. Okay, just a little nugget of trade recommendational. And it's gonna take a long time. So maybe SLV is a better way to go than just a straight silver trade. Less leverage. Okay, so let's talk about the dollar index here. This is a monthly DX chart. And the support is sort of this 92.5. Oh, the other thing to think about too is there is so much pessimism on the euro right now. The dollar is a very crowded trade. There is so much pessimism. I look at it as perspective. I'm not trading like very long term, but something like that silver, yeah. Yes. The commodity trades, I think, are longer term jobs because there's still deflation running around and people aren't going to be piling into that. It's going to be a slow kind of it's going to be a slow easing into it. It's not going to be all aboard the night train. So here's our, okay, getting back to Europe. Lots of pessimism, lots of news out. Greeks just got a 4-year extension. 4-month extension. Lots of, and we know, I guess I'm saying on the euro is we know the news. What else can they do to us? You know, that's kind of my mentality. What else can they tell us, really? All right. So lots of support here at sort of 93, and arguably it's come off it. Where's the next major level? Sort of 96.5. This is a zone that propelled price up from this change of trend. So I'm expecting, you know, a fritzing around here, a push up, and then something like this. So remember the dollar index is 60% of euro. It's effectively the reciprocal trade. All right. So this, you know, is basically saying, you know, 108, 109 for say 120 on the euro. About 1,000 pips. Okay, so let's keep this in mind. Let's keep this in mind, this area here, and how prices get to interact there. Okay, let's just throw that in the memory bank for a minute. And guys, I hope you're following along with me. I know this is a very dry session, right? I mean, technicals are kind of dry, but we can, you know, next month we'll double it up. Or perhaps I'll ask if Fixed Street, if maybe next time we could do an hour and change or something. All right. So let's cruise over to our euro. Now, fundamentally, things are not so hot here in the Eurozone. But most of the news is out, in my opinion. All right, so let's cruise over here to get as far out as we can. Here's our monthly chart. And lo and behold, it looks very similar to that dollar index. And I'm also watching this trend line coming through here, which to me was at 96.5, 97 high on on the dollar index. Okay, so I look at this puppy and going to the weekly, and we are coming off pretty good support. This is the key. So I'm expecting a little bit of a bounce. Okay, and bear in mind all the pessimism. Guys, the biggest indicator of a trade is when there's just massive, abundant pessimism or optimism. Right? When it looks like something cannot go down, just like gold did at 2000 and change. When people are buying gold because it's inflation hedge, or people are buying gold because it's the anti-stock market. When people are buying or selling something for both sides of the table of the logic, and you're sitting at night and you see Twitter coming from Merrill Lynch saying that Goldman saying that they've guided down now. Deutsche Bank, they've guided down from a target of 110 to 105. There's nothing wrong with their initial target. They now, they're doing all this. It's getting preposterous. Things overshoot, but that doesn't mean that they necessarily want to go there. It's just like a marriage. You have fights, but that doesn't mean you're getting divorced. Anyway. So here we are on this euro. Little tick up in the stochastic. Let's go to the daily. I would not consider this a compelling change of trend, but it is just marginal. If anything, this is looking more like a little continuation pattern. So I'm kind of thinking this. Right? Based on that little pattern that we talked about earlier. Right, longs on the euro. 111, 112.10, 112.60, 13.20. Those are my orders. All right. So stacked all the way through here, basically. Okay. Now the pound is a little bit different. All right. Here's the euro. It's a dog show on the 4-hour. Right. This is come off resistance. It's come off support. You're sitting right in the middle of the range. It's just like the Euro Aussie. There's nothing to do here. Yeah, I'll show you Euro Aussie very quickly. Here's effectively what's going on here. Got this. Actually, it's more like this. And this. And you're sitting slap bang in the middle of this range. There's no trend there, guys. There's no trend there. It's just range. Still fundamentally bearish on this. But if I'm going to sell it, it needs to be here. Or here. So if this hypothetically broke to the upside, I'm going to sell that through the floor. There's not an upside break that's attractive. One, it's against the fundamental bias. And two, it doesn't make any technical sense to buy a break and pull back into this. I would be a seller of that break. And if you wanted some confirmation, you just drop to a 4 or an hourly through this period and you look for stuff like this. There's a little break up, double top, break those lows at the area. You can short this. You ask me this every time, Boyke. And not bad. We're in the job of speculating, right? Like predicting the future is what we do. And thank you. And if this is my thing is if this is resistance, and I'm a seller through here, and I'm a seller through there. Well, the thing is, Boykin, this is what I'm talking about. We know that this is resistance here. We just know that. The whole world can see that. Yeah, euro pound's the same kind of thing. We know that I should do red there because it is resistance now. We know that's resistance. It's been resistance repetitively. So this, to me, it's this whole zone. And a zone like that, you can see, has meant that kind of response on average. So what is that? 1,500 pips. And you can see the response to that here was roughly the same in terms of magnitude. Yes, they can. And then you adjust and overcome. You're going to take some losses. You're going to sit on some trades you don't like. Because they say a lot of things. And it goes back to the weather and climate thing. They say a lot of stuff that affects weather. But climate doesn't get affected only every few years. Literally. So yes, you're going to have your hot days and cold days. Janet's going to come up there. Maybe she fought with the husband. Maybe she's feeling a little grumpy. And she says some things because the reporters, who knows? But that doesn't necessarily mean it's a policy change. So I'm always very cognizant of, because what was it? November, December, no, we're raising interest rates. It's all aboard. And I'm like, no, you're not. You're not raising interest rates. That's all lip service. That's some talking down rates more. That's some talking up rates to slow things down a little bit. Remember, there's verbal interventions as much as anything else. You're not raising rates. There's no wage inflation whatsoever. No, I have stochastics, I have pivots, I have some moving averages. But I see through those things. They're just complementary to me. I see through the noise. To me, this is the core of it. You could strip all that away and it's not a big deal. So I guess what I'm saying is, to predict in the future, if price gets in here, there's a very good chance that it's going to repeat the magnitude of this move, particularly because that's the fundamental bias. So I'm going to be looking to sell 55 to 58 down to 40. Or at least down into the mid, at least 55 down into 50 or something. And I'll stack orders through here. So it's not necessarily predicting the future as much as it is, just looking at support and resistance. The thing to consider is this a continuation like this? We don't know, but fundamentally, I don't believe it is. Right, so I'm going to stick with my bias here. I'm trying to get short through here, or at least that trade. No, I trade on the shorter term too, but I'm not going to sit there. I'm still going to trade in, even if I'm trading intraday, I'm still going to trade in alignment with my bias. So in other words, on the pound, I'm a bull right now, and I don't want to run too far over my time. I've got 1 minute. This thing broke down. I had an order today at 53.40. This thing, I had this sort of trap here, but because I'm a bull, relative to that sliding scale or sort of fundamental bias we talked about at the beginning of the session, this broke down. I want to know part of it. Why? Because it's into support. It's the same token. If this breaks up, that's not a good sort of upside pullback trade. Why? Because it's into this. So if anything, we're going to see a little change of trend down. But because I'm a bull, because of this change of trend, I want this to make a 4-hour little change of trend and start pushing down. Because guess what? 53.40 has been executed. 51.80, 150.80. I got an order here, and I got an order here. And when it gets down here, I'm expecting sort of something like this to develop. And, is that a prediction? I don't know. It's reacted here before. It's done a little change of trend, particularly on the daily chart. I expect there to be buyers there. It's the same token as I expect there to be sellers here. I think the pound's overdone. I think the shan's coming off the dollar. So, and the same thing, once it's done this move, it's going to be ugly too. I'm expecting it to push down here, but probably closer to 158, 160. And yes, there will be shorts there. And also remember that we're looking for the dollar index to push up towards 96.5, 97.5. So with that in mind, we're going to see one more bout of dollar strength. But for the time being, we're looking for the 91.5 move, 92 move on the dollar. That makes me a dollar bear for the time being. When we've seen sort of, 116.5, 118 on the euro, and when we've seen the better part of 157 to 160 on the pound, I'll be a dollar bull again for a while. And then I'm expecting for the better part of the end of the year. Time frames are difficult always in Forex. But next year, certainly looking at around Christmas and next year, I will be a dollar bear. A proper, legit dollar bear. And I think then you'll see the yen sort of 125 back down to 100. Okay, so covered a lot of things today, and we barely scratched the technical surface. But what we did talk about was support and resistance. We talked about bias. We talked about trend changes. We talked about how things react around those areas. It's because of the cycle of things. I think the shine will come off the US economy. I think they're going to burn out a little bit on growth. And I think you're still going to see sort of muted wage inflation. And interest rates are going to disappoint people. In the same context, I expect the Aussie to recover quicker, the Kiwi to recover quicker. Maybe the euro is sort of still flat and kind of lame. But, I'm certainly looking to sell the dollar when the time comes. When will the dollar strength come again? I think, more numerically, I think it's going to be sort of 158 to 160 on the pound, sort of 118 on the euro, 83 on the Aussie, that kind of thing. Okay. All right, guys. Well, I hope you learned something. And, could go to 94 cents. I don't know. 94's, it's a stretch. 94 is a stretch, but I'm not ruling it out. Honestly, I don't know, Jay. If my 2 cents, on this is, sorry, I know that's I'm not evading your question by any stretch. And I've seen some things in Forex, that you never, yes. Here you go. C5 David Pegler at Yahoo. And I'll send you that little PDF. I think it's supposed to you'll just come right back in line and just keep kind of ticking out towards 110. Or 101, sorry. Euro, let me just answer this question very quickly because I don't want to come across evasive yet, but I'm expecting kind of something like this. Back up to this. And then lots of that kind of thing for a very long time. Sort of the 119 to 110 kind of range. No, I had to, a question about my bees. Unfortunately, I had to move, so I sold all my bees. I'm in Georgia now. So I sold my bees a month ago. I've only been here 3 weeks. Okay. Thanks, guys. All right. Good luck, everybody. And I hope you enjoyed the session, and we'll see you next month. Thanks.